Hi, Paul Gerard, back again for another video in our Investor Channel series. And this video is about when do I report capital gains and losses? And that's a really common concern or question, and it's an important one to ensure that you report the correct matters at the correct time for tax purposes. And the decision is based on the timing of what is called a CGT event. So CGT law, or tax law, prescribes certain CGT events. They're all given a coded number. And there's a table in the legislation which addresses the rules for each type. And the most common one is A1, and it's a disposal. This is when, for example, a contract is entered into with a broker for the sale of shares. Or if no contract, then when the ownership ceases. So let's use an example here. You sell shares with a broker on the 30th of June. The settlement of that sale doesn't occur until T+3, and so several days later you get the proceeds. The sale is deemed to have occurred because there is a contract. The contract was with a broker. That's evident with broker contracts. But let's assume then that what happens if it's an off-market transfer. Mum and Dad decide to transfer off-market. Well, they will have completed a off-market share transfer form. That then becomes a contract. But a different example of a disposal without a contract could be, for example, a property where Dad decides to sell half of his, or transfer half of his property in New South Wales to his spouse, new partner, for example, because he knows about the stamp duty concession that says such a transfer from full ownership of one taxpayer into 50-50, and it's their home at the time, there's no stamp duty. So there might not be a contract. It might be a very straightforward solicitor instruction to, can you effect this transfer? So it'll be when it settles. Okay? And in that situation, it may well be that it's exempt anyhow, in which case it might need to be reported at the time of that CGT event in the relevant return as a 50% disposal or partial disposal of an exempt asset. So Dad might need to be aware of that for that purpose. So, but other forms of CGT events can occur involuntary, for example, destruction, end of an asset's existence, even councils resuming land, and all sorts of examples. So there can even be things like G3, a loss. If a company was to cease trading and reports shareholders will get nothing from winding up, a loss may occur at that time when a liquidator makes that declaration. So we commonly see requests from taxpayers for shares that are long gone, no money received, etc. There's a source of information for this. delisted.com.au is a very good website which may provide a good history to these matters. And rarely, we sometimes find people, if you Google the company, you might even find a liquidator notice. If that's the case, do provide it at tax time and it can be included. You just need to advise the cost that was lost on that. And then another example of a CGT event that occur involuntary could even be C3, which is an option that expires. So if it has a cost base, because you paid for the, let's say, exchange traded options that had a 2-year life, you paid 2 cents for 10,000 options, you may well find they lapse, and therefore you can claim the CGT loss at that time. Couple of common questions we get. I have a contract. I sell the shares on the 30th of June, but this doesn't settle until the 2nd of July. Okay, simple one. CGT event, 30th of June. The fact that you don't receive the money, ignore that. It's the contract. And a property sale with a contract for a 1-year settlement. Okay, now a special rule applies here. Now the CGT event does occur in the year of the contract being made. So it doesn't matter when property settlements occur, it depends on when the contract's made. Now, there's a special CGT concession that applies to this which tax advisors, or many tax advisors, but possibly not all, know about, which allows the taxpayer to defer the lodgement of the CGT reporting, tax return. So it might be suitable in that situation to initially lodge your return, not including the disposal of the property. And when it does settle, it's the onus is on the taxpayer to promptly and generally within 30 days amend their return to include that capital gain. The Commissioner will, on request, remit any interest or penalties from the delay. And it's designed so that the alignment of when the property settles, i.e. the cash, and the tax becoming payable are better aligned. So it's an administrative concession rather than a legal concession. So I hope that's helped address your questions or knowledge on when a CGT event occurs. And like always, if you're not sure, just ask. We're more than happy to guide and assist you. And so until we're able to speak again, I want to say goodbye and thank you for joining us for both this series and this video. And check out our PAS TV for other channels, other themes and other videos, and we hope you get a lot from it. Cheers.